Anna, you're on mute.
Good morning, good afternoon, everyone. We're just going to give a couple of minutes for participants to arrive. Welcome to our webinar. Okay, welcome everyone. My name is Ana Lima, and I'm the Partnerships Lead at the Accountability Framework Initiative. We're very, very pleased to have you with us today for this webinar on managing deforestation risk and investment portfolios. This work is very important for AFi because we are a coalition of over 24 of environmental and human rights organizations, and our work focuses on mainstreaming responsible supply chains in agriculture and forestry. So it's a vital part of our role to help translate these shared expectations on responsible production and trade into practical implementation guidance, particularly for companies that seek to address forest loss, ecosystem conversion, and rights-related related risks in their supply chains. So as we know, progress does not depend on companies alone. It also depends on the financial institutions that invest in, lend to, and underwrite companies connected to soft commodities production and trade. So for those institutions, these issues are not only environmental and social concerns. We know that for financial institutions, these are material risks, either through legal, operational, reputation, market, and transitional related exposure. And recognizing that risk is only the first step. Investors also need to know what to look for, what to ask companies, and how to follow up when commitments are not matched by implementation. And that's why AFi developed the Finance Tool with PRI to support a more systematic and practical approach to assessing portfolio exposure, engaging companies, and driving progress across high-risk sectors and supply chains. So on today's discussion, we want to talk about how practical implementation can be, how investors can use structured guidance, credible data sources, and more precise engagement questions to move from broad risk recognition to more effective stewardship and company action. So a few quick housekeeping points before we begin. This session is being recorded, and the recording will be made available afterwards. We will have time for Q&A later in the session, so please add your questions in the Q&A box as they come up at any point. And we would also be very grateful if you could, we'll be very grateful if you could complete the short survey at the end of the webinar, because that helps us to understand what was useful and where further support may be needed. So before we move into the presentation, we would love to start with a short poll. So the question is, what do you think is the most challenging aspect for investors working to address deforestation risk in their portfolio? And then you can choose one option. The options are identifying when deforestation is a financially material issue, assessing reliable data to assess portfolio companies, determining the critical issues or ask on which to engage a company, following up to make sure the company implements the needed improvements, or I'm not sure, and that's why I joined this webinar. There is no right questions. I can see the responses still coming in. Thank you. That's very, very interesting. That's very helpful. It looks that the main challenge coming through is assessing reliable data to assess portfolio companies. And I think this is exactly the focus of this tool. So we are joined by three speakers who will bring complementary perspectives. First, Jeff Milder, our director. Jeff has led AFI since the accountability framework since 2019, and he will introduce the AFi Finance Tool, explain why it was developed with PRI, and show us how it can help financial institutions to assess, engage, and drive progress on deforestation and related risks across portfolio. We also joined by Chiara Vitali, Senior Stewardship Specialist for Nature at PRI. Chiara will speak from the perspective of PRI Spring and collaborative investor stewardship, including how investors are working together to address nature, biodiversity, and deforestation-related risks. And we have Ruby Jang, Engagement Manager for Biodiversity and Natural Capital in Stewardship Service of Morningstar Sustainalytics. So Ruby will bring a practical user perspective based on her work supporting investors and in company engagement across nature, biodiversity, and agricultural value chain issues. Jeff, over to you.
Great. Thanks very much for that introduction, Anna. It's wonderful to have you all here with us today. Good day to everyone. I'm going to begin with a very basic yet critical question. Why does this matter? Because we're in an era where sustainability is being scrutinized. So very often the precondition for action is making the case for action. So in this context, deforestation is such an important topic to focus on because it's a driver and proxy for so many salient risks and impacts. And this includes impacts of companies on people and the environment, as well as impacts of sustainability on companies' financial performance. Of course, when a forest is cleared, this destroys biodiversity. It impedes functions like rainfall and flood regulation. It emits greenhouse gas emissions. And very often it's accompanied by human rights violations. These then translate into a variety of financial risks, most of which are growing. And these include regulatory and compliance risks, operational risks, as well as physical risks associated with the decline of nature in the places where companies produce and source commodities. So just putting a couple of numbers to this point, for the portion of an investment or lending portfolio that's exposed to the food and agriculture sector, deforestation and conversion are often the single largest contributor to greenhouse gas emissions. So if you're managing climate risk, for instance, it's important to know that deforestation accounts on average for 60% of the emissions from Malaysian palm oil, 3/4 of the emissions from Brazilian soy. And on the nature side, the picture is similarly overwhelming, with agricultural expansion being by far the largest driver of habitat loss and species extinction globally. So fundamentally, if you're an investor exposed in the food and agriculture sector, managing climate risk and managing nature risk means managing deforestation risk. Yes, you can look at soil health, you can look at agroforestry, but you must look at deforestation. And this is the reason why 7 years ago we published the accountability framework to support and systematize how companies address deforestation, along with associated risks of converting other natural ecosystems like savannas and peatlands, as well as human rights abuses that are linked to the agri-food and forest product supply chains. This includes as well other types of businesses that rely on soft commodities, for instance, in sectors such as apparel, automotive, pharmaceuticals, and biomaterials, in addition to food production, trade, and manufacture. The accountability framework is global. It works across all commodities that drive these impacts, and it also addresses the supply chain end to end. And these features are helpful for investors whose portfolios usually span different sectors and types of companies. So, just saying a bit more about how the framework works and how it's applied from the perspective of companies that operate in the soft commodity sectors, the framework serves as a holistic management system to be able to address these risks and achieve responsible supply chains. This includes every step in the process, beginning with goal setting, embedding goals throughout the company, managing specific aspects of commodity production and sourcing, collaborating with other stakeholders where necessary to address risks, and then finally monitoring, verification, and reporting. So this is a structure that companies follow as they use the framework, as they progress towards responsible supply chains. And it's similarly a structure that investors can use as they work with companies in their portfolio to do the same things. One more feature of relevance to investors is the framework's role in fostering alignment of expectations and initiatives addressing deforestation risk and responsible supply chains. Our initiative got going really as an effort to build consensus among civil society in order to provide companies with clear direction in implementing responsible supply chains. So, as Anna mentioned, the sort of inner circle of this hub that we manage is about 24 civil society organizations. But through its application over the years, the framework's role has expanded to a much broader one, helping to align a wide variety of standards and policies, guidelines, tools, initiatives, and accountability mechanisms in this space of soft commodities and deforestation risk. Well over 100 of these different instruments and initiatives altogether. So we do have many years of experience as well, applying the accountability framework to support the finance sector, to help structure how the finance sector understands, assesses, manages, and monitors deforestation risk. And just to give a few examples of this application and where you may see the accountability framework embedded in some of the tools and partners that you already use, the framework has been used widely to structure how corporate performance is evaluated and how that evaluation is pushed through some of the most prominent data sets in this space. It's been used to guide how financial institutions themselves establish policies and due diligence systems addressing deforestation risk. It's been used to prioritize and formulate investor asks, define criteria for green finance and lending, and also to create stronger alignment in target setting and accounting between climate, nature, and land use change. And there's some further applications of the framework that are coming up as well. One notable one I'd like to mention is the deforestation-free finance transition or DEFT pathway, which is being developed by Global Canopy and helps automate the process of investor asks based on company progress and gaps. So that's a good one to keep an eye on. With this context, I'm now going to shift to the focus of today's webinar, which is presenting the AFi Finance Tool. So the idea for this tool formed over the course of many conversations, both with financial institutions and with different investor platforms and initiatives, that in one way or another, we're all working on the same challenge, which is how to make the management of deforestation risk routine business practice within financial institutions. These conversations investors are having difficulties, and what are the things that might help unplug these bottlenecks? So top of the list were four different things. The first is consistency. How can we establish a standardized and consistent approach to assessing company performance? And in this regard, there's really no need for investors to reinvent the wheel. There's a lot of great material and data in this space already that investors can draw upon. At the same time, existing data, disclosed data, don't always tell the whole picture. So a second critical need is interpretation, scratching beneath the surface to understand what's really going on with the company and its impact and financial risks. The third is prioritization. The nature of stewardship usually is that it requires focusing on just one or a few points. And choosing what those points are is really all important in order to drive the desired impacts. Early efforts at portfolio stewardship in this space were quite laborious in many cases. Finding ways to bring that into routine business processes through streamlining and standardization was seen as a critical unlock. As Anna mentioned, we worked closely with PRI in developing this tool, specifically in helping ensure that the tool would be a mechanism to help investors involved in nature stewardship through the PRI Spring initiative in order to address deforestation risk effectively as part of an overall nature stewardship strategy. So we're very excited to have recently launched the finance tool. We launched it a week ago. This is the first public presentation we've made of the tool. So first to start with applicability, the tool is applicable to nearly all types of financial institutions, including investors, pension funds, asset managers, banks, and other capital providers. In today's webinar, we're going to be speaking mostly about the use of the tool for investors, but bear in mind that the tool is applicable to these other types of financial institutions. Broadly, the tool aims to help financial institutions assess deforestation and associated risks, do effective engagement, and then drive measurable progress in mitigating those risks in line with the accountability framework. Also, it's important to recognize that companies are at very different stages of progress, and so are investors. And so the tool in that regard is flexible and modular, and investors can pick it up wherever they happen to be in that progression. The tool includes two different components. The first is the criteria and data references, which are presented in an Excel format. And the function of this part of the tool is to assess company performance on deforestation and related risks. So for the nearly half of you in the poll who said that data is the biggest challenge, this part of the tool helps speak to that. It includes 30 criteria for assessing performance and risk, covering company commitments, implementation, and disclosure. And these are cross-referenced with the accountability framework. They're cross-referenced with key data sources and also with the PRI Spring Company Assessment Framework. And this clarifies how the finance tool supports investors to address deforestation, again, as part of an overall nature stewardship strategy. This tool can be used to do assessments of single companies, but also to systematize those assessments across an entire portfolio. And then second is the stewardship guide, and this guide goes into more detail about the actual process of engagement. So for those of you in the poll who noted that it's that step around prioritization and follow-up that's the most challenging, the stewardship guide speaks to that part. So let's look in a bit more detail about these two parts of the tool. So here with the criteria and data references, you can see an example of the tabular format that we use to present the criteria and to benchmark those across the data sources to which financial institutions usually have access. So in many cases, data will be available from an off-the-shelf data set, such as CDP or Forest 500. And if so, that's great. The tool provides the indicators that investors can look at to procure that data. If data are not available from those sources, then the tool indicates which indicators from GRI can be looked at within a company's GRI-aligned sustainability report. And if none of those data sources is available, then the criteria provide a basis for the investor to make a data request to the company and to do that in a way that's very standardized. So it will be familiar, understandable to the company when they receive that. They'll know what they need to provide. So moving on to the stewardship guide, this is where you will find additional detail on how to apply the criteria in a stewardship context. And this is done at three levels. So first, with assess, the guide provides additional explanation of what to look for through that assessment step using the data sources that I just mentioned. Clarify is a key step, and this is where we heard a lot from investors about the challenges they face. In many cases, for instance, to use an example, an investor might ask a company for information about how they manage risk in a sector like palm oil or wood. And the company might say, well, we use certification or we have a risk assessment protocol. So does the conversation end there, or is there another conversation to have about how those tools are applied, what they cover, and whether they're really adequate in practice to address the risks, the impact and financial risks of the company in those contexts? And this is where the clarify and follow-up conversation becomes so important. And the stewardship guide explains how that can be done. The third part is act, and this is where the investor decides which topics or criteria are most urgent for engagement, speaking to the challenge on prioritization, and then formulating those asks and being able to follow up to make sure that the company implements them. So to give an example of how this would work in practice, you're an investor. You have holdings in a company that produces beef, like a slaughterhouse or meat company. So you're going to go through first that assessment step, pulling data from the sources mentioned, and then evaluating the company's performance across those three areas: the quality of the company's commitments and policies, implementation mechanisms, and the quality of disclosure. That assessment might lead you to say, there could be an issue here. And this is where you go to the stewardship guide and follow up to ask those clarifying questions to understand whether there is a significant performance gap. And if so, whether that gap is consequential in enabling or failing to address deforestation within that company's business. That then provides the basis for determining if this is a point for engagement, how to do that. Those first two steps around assess, prioritize, and engage can fit then within a broader ongoing workflow within an investment firm, where those steps are followed by follow-up monitoring, and then over time, updating assessments, adjusting priorities as needed. And ideally, if the stewardship process is effective, then companies in the portfolio will be addressing some of the foundational gaps. For instance, if they lacked no deforestation policies, they would have established them. The engagement process can then move on toward addressing the next set of issues, for instance, around implementation. So with that overview, I'm going to pass it back to Anna, and we have the opportunity to hear some additional perspectives from our panelists on this tool and how it speaks to investor needs.
Thank you, Jeff. I think that was a very helpful overview of the tool, and especially the focus on the practical side of it, which is what we aim at. So what sits behind a commitment, the quality of the implementation, the adequacy of supply chain management, and the questions needed to clarify those gaps. And I think with that in mind, I would like to bring Chiara and Ruby into the conversation. Chiara, perhaps I can start with you. So before we come into the tool itself, could you briefly situate your role at PRI and the purpose of Spring, particularly how Spring supports investors in addressing nature, biodiversity, and deforestation risks through stewardship? And then from that perspective, what can you tell us in terms of the gap that the AFi tool help to fill, and how do you expect to be used in practice?
Great, sure, happy to. Thanks, Jeff, for the great overview of the tool. And yeah, thanks, Anne, for a really good question. Yeah, so in terms of introducing Spring, so Spring is the nature arm of a PRI portfolio of initiatives that facilitates signatory action on system level risks. The initiative was developed essentially to enable investors to take action in line with their fiduciary duties to address the system level and financially material risks stemming from global nature and biodiversity loss, and therefore to protect the long-term interest of their investment portfolios. The initiative does this by supporting groups of investors to collaboratively engage with a set of companies that have been identified as holding influence over the dynamics that drive deforestation and biodiversity loss. All of this is laid out on the PRI Spring website, the company methodology list, and all of our participating investors. So I encourage anyone interested to take a look at that for a bit more detail. But overall, the initiative has two strategic focus areas. As I mentioned, it's focused on forest loss and land degradation in selected key geographies as principal drivers of biodiversity loss on land. And it also emphasizes the need for responsible political engagement by companies to support an enabling policy environment to tackle these drivers. Spring launched in June 2024, which marked the beginning of a multi-year engagement process. It now numbers 246 investors globally endorsing the initiative, representing over 20 trillion US dollars in assets under management. And 99 of these investors are also actively participating in engagement with companies under Spring. These numbers do continue to grow, and we really take this as a strong signal of investor momentum in engaging on nature and biodiversity loss and looking to work with companies to mitigate the risks these pose to long-term returns. So engagement through Spring really focuses on three thematic pillars of company practice: business operations, strategy and risk management, supply chain management, which is part of what led to the work with AFi and the creation of this tool, and this tool really kind of speaks to and can be very leveraged effectively in, and also responsible political engagement by companies. So investors who participate in Spring engage with companies across these themes with a focus on what is most relevant for each individual engagement. And they engage across sectors ranging from food and agriculture to retail to automotive, and also across multiple commodities and jurisdictions, depending on the specific company's nature, structure, and operating model. So that's to say we're really conscious of the varied nature of the work of an investor in terms of engagement, of the resource-intensive nature of active ownership, and also of the technical depth of some of the dialogues that are taking place as part of the initiative. So really providing that capacity building, the relevant information, expertise, and skills, and the right tools to make our participants' work easier and more effective. We see that really as a core part of the role of the PRI as the Spring Secretariat. And this includes navigating sometimes intricate company disclosures, but also a huge volume of data available from various excellent providers, and really helping zero into those priorities for improving corporate practice and mitigating risk from nature loss. The information and the data is out there. In fact, there's a huge amount of it, but I think now we're at the stage of really making it usable and easily interpretable, as Jeff mentioned in his presentation, and applicable in engagement. So from a Spring perspective, tools like the AFi Finance Tool, they really help investigators navigate this kind of sea of data and move from that information overload to insight that can be really applied in engagement by providing that set of structured criteria, and then really importantly, signposting investors to credible data sources to be able to assess progress. So basically, that's how I hope Spring participants and other investors who are engaging with companies will be using this tool to really help prioritize engagement and as a map to help more efficiently guide them to the information they need to have effective, detailed, and constructive conversations with the companies they're engaging with.
Thank you, Chiara. And your response seems to link very closely to the audience perception that this is the starkest challenge. It's not always the absence of information, but the difficulty of turning this large amount of information to something that investor can actually use in engagement. So, Ruby, let me bring you in from the practitioner and user perspective. Could you briefly tell us about your role at Morningstar Sustainalytics and the kind of stewardship work you support on behalf of investors? And then you have reviewed the tool, so we would love to know which parts do you find the most useful for practical company engagement and why. Over to you, Ruby.
Yes, thanks for the great question, and thanks, Jeff, for really good presentation, and Chiara to provide very nice context in terms of PI Spring. So maybe also provide a bit context about Morningstar Sustainalytics Stewardship Services. So we are the leading stewardship services provider for institutional investor, supporting currently over 100 global asset owners, asset managers, in terms of their fiduciary duty to engage with their portfolio company across various ESG topics. Jointly, we represent around $6.5 trillion euro in asset under engagement. So from forestry related engagement, I would say we have kind of two main focus. One is really focused on like deforestation risk mitigation. So for example, we have some controversy related cases like deforestation or land grabbing, land dispute, as well as maybe we target company with high and severe ESG risks. Based on our Sustainalytics ESG risk rating indicator on maybe land use change and biodiversity, deforestation policy and program, and supply chain management. So besides risk mitigation, on the other hand, we also focus on the impact or opportunity side. So that's why we also target maybe, for example, agricultural value chain on themes such as biodiversity to really drive more systemic impact across the at the scale at the value chain level. So as my role specifically as engagement manager focusing on biodiversity and natural capital, deforestation topic definitely is super material. So like Jeff mentioned in his slides, to manage climate risk or nature risk, first we must look into the deforestation risks. So it's my pleasure definitely to get the opportunity to stress test the AFi Finance Tool as part of being a commitment as my PRI Spring Signatory Advisory Committee member. So overall, after reviewing the tool, I find it extremely valuable as really like a one-stop shop for stewardship practitioner. So like Jeff mentioned, there are two components. The first one is really like an Excel sheet, which clearly map all the leading third-party data, for example, CDP, GRI, Forest IQ, Forest 500. These are really key insights for us as engagement practitioner to really look into on those companies' approach or disclosure on forestry related management. And what would like to highlight especially is on the stewardship guide. So it's like a PDF format, and so they really document quite well. And I think actually before do the stress test, I know already well AFI, they provide very strong guidance. And with the stewardship guide, they really bring everything together in a very practical way, especially for us as an engagement practitioner. So for example, they really break down into key topics like the commitment, implementation, and disclosure, and they really tell us what good really look like, what we should expect from company when it comes to, for example, maybe their policy commitment, whether there's any time bounds, for example, like target day or cut-off day, what are the expectations for human rights aspect or grievance mechanism. So they really detail down into those topics for us to really engage further on towards the best practices. And I would say what's also valuable is for us is to really assess those hidden gaps. So I feel like as an engagement practitioner, the challenge to assess company disclosure is often not on what company has already disclosed, but what they don't tell us in their disclosure. So I would say in the guide, they really provide some, for example, clarifying question or potential gaps in terms of company's performance. So as I often say, maybe like the devil is really in the details. So I think the guide really provide us those specific details into what are the obvious gap or what are the gaps currently really at company's current performance, which I find is super valuable. And last, maybe as a forward-looking note, I would say as AI currently really now in everyone's day-to-day mind or something, I would say the tool can be very valuable in terms of training, for example, maybe AI agent to get to know what are the best practices look like, what are the potential data that we can collect it already from maybe third party or from the company's disclosure, and then to identify maybe what are the potential gaps in terms of their current disclosure and the best practices, and maybe even as AI maybe to provide some suggested engagement questions and maybe future, maybe even some suggested action and maybe some the AFI tools or sources that's already available in the market that we can also support company to move towards the best practices. So overall, it's not just a tool, but I would really see the potential to really scale up and really enhance our stewardship effectiveness over time. And also importantly, to really align the message across different investors. Because for example, like PRI Spring, there are maybe around 60 different investor group. We all targeting different company, engaging on deforestation, but how we can really ensure our messages is aligned across those engagement group, that will be really valuable. And I think the guide can really serve this purpose to ensure we have like the mutual goal to work on and aligning messages across the board.
Oh, thank you, Ruby. Thank you very much for putting it very much from a perspective of, how an analyst or engagement specialist can use the tool when review company disclosure or preparing for a company engagement. So I think I would like to open the discussion for a little further and look at some of the practical challenges that investors face when they assess a company progress in terms of those risks. Chiara, from a practical stewardship perspective, I think you told us about the overflow of data and how investors deal with data prioritization and why it's so important to have a tool like that. Can you tell us what are the challenges investors face? Is that company complexity? Is that knowing what to ask next? Can you illustrate other challenges that we perhaps can help with a more structured approach to it?
Yeah, happy to. I think there are a couple of levels to this question, really. So I guess firstly, you're looking at that kind of process of moving from really quite high level asks to those more detailed and precise questions that can really kind of get to those to digging into those data gaps that we've been talking about, or those practice gaps. And then sort of translating those into objectives that can really drive outcomes. So this is, again, we're looking at investors who are in the realm of engaging with companies that have extremely complex operations and value chains, and sort of how do you prioritize and really dig into the right level of detail. I think that is, I'm going to sort of go back to that stewardship guide part of the tool. And I think that's where the assess segments of that PDF of the stewardship guide are really, really helpful. And they can really kind of help zero in on the priorities and then kind of really lay out that journey into those clarify and act segments that can really help ask the right questions to distinguish between those data gaps and sort of shortfalls from best practice, and really setting those objectives that then investors and companies can work together towards ensuring that alignment with good practice is achieved. And I think something to note about that as well is that this is also about ensuring more valuable dialogue for companies too, and just really making sure that those engagement conversations are informed, that they're outcome oriented, and they're really making good use of the kind of technical experts within the company's time too. Since we really very much see stewardship as a constructive and collaborative effort towards good performance and safeguarding long-term returns. And then, it's kind of, going to repeat myself slightly, but it's going back to that, sorting through the wealth of information that's available and really taking into account that kind of, that resourcing reality that engagement teams are often tracking many companies across multiple sectors. So, I think a key barrier is that availability of tools that can point to the most decision useful indicators, data sets, and then indicators within those data sets.
Excellent, thank you, Chiara. And I think this is how this collaboration helped us, is exactly to point out which indicator in which place and when to look at it. Thank you very much for that. Ruby, from your engagement experience, what type of company information or disclosure can look strong on the surface but still require deeper follow-up questions?
Great questions. And I would say, so for example, Jeff mentioned the 3 pillars on commitment, implementation, and disclosure. I would say generally there are gaps across the 3 pillars, and I can maybe deep dive into about it now. So from policy commitment perspective, I would say usually company as a first step, they will say, yes, they do have zero deforestation commitment. However, again, devil's in the detail. We need to assess the scope of the commitment, like whether it's only direct operation or really across their value chain, and even including maybe indirect suppliers' perspective, or whether it's including maybe their franchise or subsidiary. So there has been a lot of different level in terms of where those commitment lands. And I think I saw some of the question as well. So whether it's also tackling legal or illegal deforestation. So that's also maybe some of the thing that we engage in our engagement dialogue. So I would say maybe Jeff can also jump in later on, but I would say AFI, the best practices is really that we want to have deforestation and conversion free supply chain really across different level at different commodity, different geography level. And it also doesn't matter whether it's legal or illegal deforestation. And besides AFI, that's the same goes to, for example, SBTI, they have the flag guidance for agriculture sector. In that, they also ask company to have no deforestation commitment. And it's regardless whether it's legal or illegal. So definitely from the best practices perspective, we do want company to address the issue across different level and across different geography. So maybe one example I want to provide is also regarding the scope of the commitment. So one of the US company that I engage with, they clearly say, for example, soy is the most difficult high-risk commodity they are tackling. And they do have, for example, zero deforestation policy in place. They join external initiative, for example, Amazon soy moratorium. However, a lot of soy, especially from Brazil, like around 50% is really coming from Cerrado. And then most of the Cerrado has been already converted because of those agricultural expansion, because of soy and cattle. So if your commitment is not really expanding to land conversion level, you will not be able to really tackle the issue on the ground. So that's definitely, we do see will be able to identify the key gap thanks to the guidance of AFI, and then to really implement it to the engagement conversation, and then to really ask the right question to the company. And so besides commitment part, in terms of implementation, because I think this is also super material to really operationalize your commitment and policy. And I feel like company might usually have kind of gap in terms of how they really disclose on their operation. So for example, whether the commitment is really integrated to their procurement or sourcing policy, or whether the supplier, for example, they have supplier code of conduct, but whether it's also required to meet maybe zero deforestation, etc. And also from governance perspective, if the board is really responsible to overseeing those deforestation risks, what are the KPI to really support the board to really oversee their performance, and also even whether there's any target linked to executive compensation. So those are the details that we really need to ask as an engagement practitioner. And I would say the stewardship guide really provide like a clear overview in terms of what will be the best practices, what are the expectations that we need to work on. Lastly, to highlight on disclosure, because I would say companies generally only disclose what they are proud of or what they are currently working on, and they really shy away from those practical things. So I think with the guide, we will be able to really understand better, like what exactly we want company to disclose on. So for example, the proportion of maybe their sourcing origin, whether it's from certain country, whether they have the traceability really not just at the national level, but even to the subnational level, or even to important biomes, etc. So I think the more disclosure definitely will provide more granular for us and also for investors to make more informed decision. And what are exactly the information we want as a engagement practitioner. A lot of information is definitely in the stewardship guide, which again I would definitely highly recommend people to read after the webinar. So I think that's it for now. Handing over back to Anna.
Thank you, Ruby. That was very insightful, and I would like I think I'd like to move to the Q&A. We got very interesting questions coming in. Perhaps I'll hand over to you, Jeff. Can you comment a little bit on how can the tool help address challenges around the visibility of companies exposed to deforestation risk, particularly the SMEs and companies further down the supply chain?
Great. Great question. In most supply chains, there are layers of suppliers. There's direct suppliers, there's indirect suppliers. In many cases, the supply networks are quite vast. So that becomes potentially overwhelming for investors. And I think a good place to come back to is to say, what is the nature of the business relationship that the investor has, and how does it use that business relationship both to understand risk and to mitigate that risk? So fundamentally, the investor has a relationship with the company that it's investing in. That's the point of leverage it has. And that company's further upstream suppliers can be influenced only indirectly. It's typically quite difficult for investors to reach those suppliers. So the way that the tool addresses that is to look in quite a bit of depth at sort of what is the responsibility, what is the expectation for the company that the investor has a direct relationship with to be managing that upstream supply. And that comes out especially in the criteria in the stewardship guide around traceability. So what level of information and visibility is there to actually who you're sourcing from? And in many cases, that information is incomplete. Sometimes it's woefully incomplete. Sometimes it's just smaller gaps. And then additionally, criteria around management of direct and indirect suppliers. And so this is where going into detail is quite important, and really understanding the nature of the systems that the company has, both to understand the origins of materials, to make sure that its policies are cascaded upstream to direct and indirect suppliers, and to make sure that there's an ongoing engagement and monitoring process to ensure that risk is addressed there. In some cases, as part of that follow-up process, an investor might indeed, want to ask for the names of a company's suppliers. If it's operating in a high-risk region and there's concern about, is this company associated with a particular bad actor that could really be a lightning rod for financial risk or legal action, that could be an appropriate thing to do. But fundamentally, addressing it through a systems lens and understanding and doing this follow-up and clarify work to understand how the company is managing risk systematically across its supply base is the starting point.
Thank you. That's a brilliant segue to another questions from the audience. Perhaps I invite you, Chiara, to mention some examples where do you think investor engagement has succeeded in driving stronger deforestation or management practices?
Right, thanks, Anna. I'm actually going to start by answering this with a slight anecdote, but I used to be a corporate consultant before joining the PRI, and one of the things that really drove me into this position is I saw firsthand the galvanizing action of investor engagement in terms of really sort of creating that energy within corporates to really kind of drive towards change and new commitments and implementation. So I found that a really striking thing that really kind of shaped my direction. But also to move from anecdote into data, Spring has just recently published its first annual progress report, in which we presented also data on progress from the first baseline assessment against our company assessment framework of and a snapshot that was taken 7 months down the line to provide some comparative data. And already there, bearing in mind that it's taken in a very initial stage of company engagements, which, as I mentioned, are multi-year processes that take time to set up and then take time to move into sort of maturity of engagement. We already saw an impact in terms of company performance, the sort of early incremental changes in terms of higher levels of setting of commitments, higher levels of establishment of appropriate governance structures to implement those commitments, and improvements on supply chain management. Very much incremental, early stages, but we're already seeing some impact of investor engagement, and we only expect as kind of the maturity and the capacity of investors to engage deeply and meaningfully with companies progresses, we only expect that data to continue and to improve. So yeah, I hope that provides a bit of a snapshot.
Thank you very much, Chiara. That was a very, very good example, and I love anecdotes. A final question from the audience to Ruby. Ruby, to achieve and meet full commitment of deforestation free across the whole supply chain is very difficult. So how do investors address this? Capability versus capacity versus ambition?
I think that's definitely a great question. And I feel like it's really in a lot of people's mind, like how we can indeed meaningfully address deforestation risk across portfolio and also across supply chain. So I think from my side as a practitioner, I would really value already, I think from Jeff saying, I feel like a lot of NGO, institution, academia, they really work hard on the topic together. So definitely, I would say you are not alone in terms of this challenge, and really collaboratively, we wish that we can really have like a joint effort to really have this enabling environment. Really, for example, from data side, we provide more clarity in terms of what company is doing. From maybe investor or engagement practitioner side, we ask the right question to really support company to work towards the best practices or our expectation, and also maybe from standard or guidance side, they provide the best available or as clear as possible guidance that really support practitioners like us to really work on towards the best practices, or to really identify where are the current key gaps that we have to address. So I think this is definitely really like a joint effort. We really need to collaborate across the spectrum. And I would say, again, maybe back to the AFi Finance Tool today. This is, again, a joint effort already with a lot of leading institutions, really provide the knowledge in terms of how we should address the supply chain issue more meaningfully. So this is definitely not like heavy lifting step that you have to work on, because those heavy lifting step, a lot of people already work for you. So this is definitely really useful toolkits for us as a practitioner to really work on those complicated issue in more systemic way. So I hope that gives some light or hope for other practitioners as well.
Thank you, Ruby. And unfortunately, we're almost at time. So I would like to invite each of you to offer a brief closing reflection. What is your main takeaway you would like investors or service provider to live with today? Chiara, may I start with you?
Yeah, thank you, Anna. Yeah, I think we heard some really great points around how to foster meaningful engagement. I think, yeah, the sort of main takeaway for me for this is that there is increasingly a wealth of tools that are available to really help drive sort of more effective, more efficient investor action and investor engagement with companies, and that the endpoint, the driving point for that action really is to sort of work together and secure sort of better, more sustainable performance and safeguard returns for the long term, ultimately. So yeah, really encouraged to hear sort of the variety of perspectives coming together on the basis of this new tool that's available. And yeah, I really encourage investors to go take a look to sort of dive into the wealth of information that the AFi team has pulled together to create this. Engage with Spring if you think it would be a helpful platform to dive into some collaborative engagement and to have access to further tools and capacity building. And yeah, really look forward to sort of this community coming together for more of these occasions in the future, and to hopefully start taking stock of even more progress made, because we're really kind of at the early steps where there's really a lot of efforts coming together. No kind of one piece can really claim causality for the change, but I'm really hoping we're going to see more of that moving forward.
Thank you. Thank you, Chiara. We're also looking forward to developments and to everyone of taking this tool. Ruby, can I hear from you? What's the main takeaway for service providers and investors?
Definitely. So I would say good stewardship is not just about having more information, but rather really ask the better question to first support decision making and also to really support a company to understand where are their key gaps and really to support a company to understand what will be the best practices that we expect them to work on. So um, another point maybe I want to highlight it is also because companies often get engagement requests from across spectrums and also maybe various investors engage on the same company as well. So we really need to align with our messages to the company. So we don't want to confuse the company in terms of what we ask for them. So with this kind of common framework or shared expectation, that really help to ensure alignment with the best practices and also really just sending consistent signal to the company that these are the key gap. This is definitely you should work on. We can really amplify our collaborative influence and to really drive more systemic impact across the value chain. And ultimately, definitely we want to create the real world impact in the long run. And I think finally, I also just hope maybe it can be like a ripple effect because maybe not just everyone currently here that we look into the tool, but also, for example, if I use the tool in my day-to-day work, maybe other investor will learn about it, or maybe other stakeholder will also learn about it, maybe like the policymaker, etc. So once we have more stakeholders or actors being aware of the best practices, then again, we can maybe more driving the more enabling environment, whether it's better policy in place at different local level, across different geography, or maybe stronger incentives for those companies to really work on to achieve deforestation and conversion-free supply chain. So hopefully we will be able to really drive the more systemic impact thanks to the best guidance and tools available currently for us.
Thank you, Ruby. Jeff, a bit squeezed on time, but we'd love to hear from you. What's your main takeaway? And before
I'll be sure. I'll be brief. So I think, all of us are probably here because we do love forests and want to protect them. But channeling what Chiara said, the way we're going to achieve that scale is if we can link deforestation back to financial materiality, because that's what's going to drive impact of scale. And I'm going to also pick up the point that Ruby made, which is that companies tend not to disclose the things that they're not so proud of. So linking financial materiality to deforestation requires a process of ferreting out where are the problems, where are the risks in a business that are not immediately on the surface necessarily. So with this tool, we've really tried to provide a structure to help investors do that systematically, to say, it's important to look at the whole picture. Here's a way to do that systematically. As you go through with existing data and follow-up questions, you'll be able to understand where those gaps and risks are that do create financially material risks for investors and are the points for engagement. So we hope this will be a jumping off point for better processes, for better engagement, and ultimately for better impact to get to the heart of the issues and to be able to do something about them collectively. So let me pass it back to Anna. I'll put up the closing slide, and thank you all.
Thank you, Jeff. We are at time. I think you heard from us. We want to help you to know what matters, what to prioritize, what to ask companies, and how to follow up when disclosures are incomplete or the implementation unclear. And with that, I would like to thank our speakers, Jeff, Chiara, and Ruby, for a very rich discussion. Thank you also to everyone who joined today and contributed with questions. The recording will be available. And as you leave the webinar, a short survey will appear. So we would be very grateful if you could take a moment to complete it. Thank you very much. And we hope you enjoy the rest of your day.